Let's talk to Robert Omotunde, investment analyst with AfriInvest, to get his thoughts on those numbers. And of course, talk about how investors are reacting to this 2016 budget. A good morning to you, Robert. Thank you so much for coming through.
Morning, Harry. Thanks for having me.
So let's talk about yesterday's budget presentation by the president. Give us your thoughts. Will this provide some sort of clarity for investors now coming into the market?
Yeah, well, it's a good thing that this is coming at this time. Before now, the federal government has provided the MTEF, that's the medium-term expenditure framework, which investors have been able to look at to guide their investment decision. Of course, what we are saying now is a reflection of that same document which the federal government is putting on board. There are quite some interesting parts of the budget which we believe may have a medium-term positive impact on the market. The fact that the budget suggested that the government is going to de-emphasize its oil revenue because even at $38 per barrel projection, the government is expecting that about 21% of its revenue in 2016 only is going to come from oil. Other sources, taxes, independent sources, are going to account for a large chunk of revenue in 2016. This will be quite exciting for the market. But the broader perspective the market is looking at now, don't forget that the lack of fiscal direction that the market has been clamoring for is not the major drag that the market is experiencing at the moment. Yes, with the new budget and the expansionary impact, the expansionary plan that the government has to reflate the economy, of course, it's going to affect consumption, and we would expect that a lot of companies, particularly the consumer goods companies and even industrial goods companies, because of the capital expenditure of about 1.8 trillion naira, will benefit. But on a broader perspective, the issues with FX are still a major drag or a major concern. But because even if the demand exists for some of these products that I've mentioned, some of them require input to get their product produced before they can supply to the market. And these are the major issues that the market will be looking at. So for us here, we see our fingers are still crossed, and we believe that investors are not going to be too hasty to take decisions, because we need to see how these things will pan out come 2016 before we have recommended a medium to long-term investment perspective.
But then, Robert, the president says there's going to be a harmonizing of fiscal, monetary and investment policies. Surely this should engender confidence in investors.
Well, coming from the president, that may not be too exciting for the market. Yes, before now, the monetary policy and the fiscal policy authority have always had a synergy. Of course, we often talk about fiscal monetary policy mix, and it happens all over the world. But the concern most investors are having, as regarding the monetary policy authority, are some of the restrictions that we've had. Talk about the demand side management, and the fact that it appears the monetary authority is into some form of, capital control, which is constraining particularly a lot of foreign portfolio investors, from coming into the market. Yes, it is good that the president is saying there's going to be, a sort of harmony between their, fiscal policy and monetary policy. But we need to see a major step from the monetary policy authority, not just coming from the president at this time.
Well, Robert, thank you so much for joining us on the program and sharing your perspectives with us. Of course, it is officially the last trading day for this week. The markets are closed, and so definitely I will not be speaking to you until most probably on Monday. So do enjoy the holidays and try to spend very wisely. You always tell me that, especially since it seems as if it's going to be a bleak Christmas for most Nigerians. Yes, well, thank you so much, Robert. Do have a good day and enjoy the holiday.